Hello, everyone. Happy 2024. I'm Hal, ever-more-brazen, and I am joined today by Nick Fleetwood, who is head of data services at Form 3. Welcome. It's nice to have you.
Thank you very much, Hal. Nice to be here.
We're discussing fraud, but specifically instant payments and fraud. Instant payments are gaining ground. Fraudsters are looking at it as well, I'll call it fresh new opportunity. The old saying is that faster payments equals faster fraud, but we're going to dive into that. So let's get right to it. What are the different concerns when we talk about fraud that are there with instant payment that don't exist elsewhere? And we have enough of let's say, roadmap from other areas, regions, countries that have instant payment more firmly in place than we have here in the States that might give us a little bit of warning. What do you see?
Thanks, Hal. So you're absolutely right. And a lot of what I'm going to talk about kind of references the United Kingdom and where we have quite a mature instant payments architecture. And because of that, as you say, quite a mature instant payments fraud problem. So I guess the first thing to say is that, when I talk about the kind of different types of scams, some of them are the same kind of regardless of different types of the means of defrauding the victim. But there are some examples where instant payments really lend themselves, unfortunately, to a fraud typology. So when we talk about things like retail scams, which make up more than half of all the scam types in terms of cases in the UK, that generally will be a scam where somebody is on a marketplace, usually an online marketplace, and pretending to sell something. And that could be anything from a car to an electronic device, the latest console, for example. And then once the purchase goes through using instant payments, the product never arrives. The scammer has made away with the money. There are other really common ones, impersonation scams, and that could be impersonating anybody from a CEO, pretending to authorize a payment in a business landscape, to pretending to be a family member, asking for help and support. And again, really common, you hear a lot about them. They tend to be quite emotional stories, and I'll dig into those in a little bit more detail. Or you've got romance scams, and again, that's nothing new. Been going on for a really long time. But effectively, in all these different types of scams, there are three key features that I think kind of make up the scam itself. So the first is social engineering, emotional manipulation. The ability to build a relationship with your victim, and to be able to create an environment where the scam can take place. And unfortunately, it should be addressed. 80% of that starts online, according to the latest figures from UK Finance. And that enables the ability for that kind of relationship to happen, and leads to the second part, which is impersonation. So nearly all of these types of scams involve somebody pretending to be someone who they aren't, and utilizing that kind of fake persona to build that trust and be able to convince the victim to make the payment. And the third, and this is where instant payments comes in, is time pressure. They create an environment, and that might be in retail, scarcity of the product or availability. Or if you're selling something like a car, I've got someone to come and see it tomorrow who's going to pay full price. Those things create that kind of time pressure. In romance scams, it could be, we've arranged to meet finally, and I've just realized that I can't do it, or I've had a medical emergency. Same things in impersonation scams. That ability to use that emotional hook along with time pressure, and that's why instant payments is really key, to be able to be used as the kind of means of being able to execute the fraud. And as I say, this is becoming a huge problem. In the UK, over the last 3 years, we've seen a 27% increase in fraud losses, but a 68% increase in cases. So there's a much bigger increase in the number of victims because they're finding really good and really good, not good, really bad, but efficient ways to be able to target victims and be able to execute those frauds. Impersonation scam fraud is the biggest type of crime in the US, with $2.6 billion dollars of losses associated to that. And as we've seen with Zelle in November, highlighting kind of impersonation scams around government entities, and that triggered Zelle making refunds for the first time associated to those scams. So we're absolutely seeing these types of scams being executed on faster payments. And as you say, primarily because of that ability to kind of tie in that sense of urgency with that initial instant payment and ability to execute the transaction.
So with this, the prevalence and plethora of scams that you're mentioning there, and the time constraints as you pressure there, that's an interesting confluence, which then leads to push payments fraud being so effective, right? And it's certainly a problem, as we've noted. It's been a problem in the UK. So let's talk a little bit about that. Let's talk a little bit about why authorized push payment fraud is so attractive, not just for speed, but also why it's so hard to stop. Why the friction points and maybe alerts and maybe moments of speed bumps have not been as effective as they might otherwise be. And what does that mean for addressing authorized push payments fraud in the future?
Yeah, absolutely. And so let me touch on that first point, Hal. You talked about the fact that those speed bumps and the friction that gets introduced, why is that not effective? And primarily that's because of widespread adoption. In the UK, nearly all bank accounts are enabled to send faster payments. And as as an account holder, things like setting up an beneficiary, setting up an e-payment, skipping past those warnings in exactly the same way as we do if we go to a website and we're served the cookie pop up, they become second nature to us, so we don't engage with them. And because of that kind of widespread adoption, the ability for us to kind of rely on consumers to execute that kind of risk assessment every time they are doing a payment is relatively low, because people are habituated to making that payment. And the challenge with so there are kind of three elements here. One is that kind of widespread adoption. The second is, it's an instant payment. So, instant payments are not only instant in terms of making the first payment, they are also going into an account where any subsequent payments can also be made instantly. So the ability for someone who's a fraudster, and I'll talk a little bit about how they use mule networks in order to be able to send the money across a network to a point where they can exit it either through crypto or through international rails. It is there in terms of, because once you're sending one instant payment enabled payment, you can then make another and another and another. It's very easy to kind of spread those. And then the third aspect that makes instant payments so attractive to fraudsters, maybe slightly controversial, is anonymity. Now, I'm not saying that you're anonymous in terms of the fact that I have to have a name and address, a bank account, but the fact is that name and bank account can belong to anyone. Anyone can pretend to be Nick Fleetwood or give the name Nick Fleetwood associated with a bank account and be able to perpetuate a fraud through, as I mentioned before, that impersonation of a persona, and that sort of anonymity associated with the person receiving the money is really attractive to fraudsters. The fact that they've got access to a widespread adoption, widely adopted kind of instant payment rail, which is instant in terms of them getting the money and relatively anonymous in terms of the relationship between the details on a bank account and the person who's perpetuating the scam. That's really attractive, and makes it quite hard to stop when you're thinking about the fact that you're dealing with a very widespread challenge in terms of those kind of levels of adoption and instant kind of fraud.
When we start to think about bolstering defenses or crafting new lines of defense, I think we can both agree that collaboration is an effective strategy, right? The more players that are in the mix, looking at transactions, account holders, activity, and using technology to do all of this, it becomes a much more effective way to address fraud than just trying to go it alone. So what does collaboration mean in this environment? Who need to collaborate? And let's talk a little bit about, if we could, the ways in which banks can refashion the way they've approached risk management and then addressing fraud when it happens, and the ways technology can be used for all of that.
Yeah, absolutely. Great questions. So if we think about the beginning with that kind of collaborative angle, and what does collaborative mean in this space? When we think about kind of the ideal environment, so first thing I'll say, right, I've painted a pretty bleak picture in terms of the levels of scam activity and the hundreds and billions of dollars being lost. But the good news is there's now lots of kind of tools out there. There's a toolkit that you can put together that's really effective at being able to manage the ability to prevent faster or instant payment fraud. And the first thing is the key word there is prevent. Instant payments, as I say, the fact is they're connected to a network that can allow fraudsters to send that money and proliferate it really quickly. So this can't be retrospective. You've got to be preventative. And that means the first thing you're looking for in that toolkit is a real-time system. Something that is as fast as the payment itself. That can generate a really high quality, and this is the second point, high quality score that enables you to understand where do I need to apply the right friction. Because you want to let as many payments go through without friction as possible and only interfere on the ones where you think there's a high risk. And that brings in that collaborative element. How do I identify risk in a payment? And I'm going to touch a little bit on why this is so hard to stop in terms of answering the question as to why collaborative is really important. So typically, we as a financial crime prevention industry have focused on putting our risk management on what we term as the outbound leg. Effectively is the person sending the money a criminal? Have they had their account taken over? Are they doing something that they shouldn't? And in all of the scam types I've talked about, that isn't the case. It is someone who genuinely owns the account, who is making a payment, and so therefore all of those normal kind of screening behavioral aspects are minimized in terms of the effectiveness of being able to prevent these types of scams. Where you are gaining real insight is actually a combination of three things: the person sending the money and their behavioral characteristics, the person receiving the money and their behavioral characteristics, and the relationship between the two. And that is your collaborative network. So if you have everybody contributing to a data model, that can become really effective at being able to identify where you're seeing the shifts in behavior associated to risk in relation to these types of scams. So if you have that ability to score payments in real time, to be able to have a really reliable model built on consortium level data, applicable on both an outbound leg and an inbound leg, then that's a really effective toolkit to be able to manage risk associated to fraud. Just touching on quickly the inbound leg and why that's really key here is that in this context of these scams, the inbound leg is the criminal. They are the person either perpetuating the fraud or they are utilizing a mule network. And so that's really key, and it's a difficult thing for banks to sort of address. But the fact is that they've got criminals who are utilizing accounts on their network. So the ability to screen the inbound payment and ask the question: should I let this money clear? Do I think the person who's receiving this money is receiving this money genuinely? Is a really important question to ask. and the ability to kind of use technology potentially to then, reach out to the account holder and say a suspicious payment has been, entered into your account. In order to claim this, can you please call us? That's a really interesting piece of friction. How many criminals are going to do that? How many people who are all mules are going to expose themselves to that level of risk? So it's a few key things there in that toolkit, utilizing collaborative intelligence, which can really help to address those vulnerabilities.
Well, collaborative intelligence can do two things that better. And your point earlier about a proactive rather than retroactive approach uh, um, means that there can be an anticipation of anomalous behavior, but at the same time, let as many good transactions through as possible. And that's great for everybody involved, certainly for the banks and certainly for the consumer and obviously for the enterprises with which they're doing business. So if you might give us an idea of where we head further, not just this year, but beyond, let's talk about some of the ways push payment fraud might be hobbled a bit, let's hope. And then what we might start to see here in the States, because clearly so much is a learning curve. What are we going to see that will happen to push payment fraud? Where is the hockey puck going, right? Because it's got to evolve. And what is going to be the natural evolution of collaboration?
So if I think about where things are going in the US, I think we're seeing let's first talk about, there is going to be a greater adoption of instant payments, especially with, the launch of FedNow, and the incentivization to be able to make that available. Obviously, the continued growth of networks such as Zelle. These things are inevitably going to lead to more widespread adoption of instant payments. So when I think about kind of the reality is that's going to create that opportunity, that environment for fraudsters to be able to execute it. And I think there are some key things that are going to happen that are going to really help us to combat the fraud challenges associated with instant payments. So the first is, I think there's going to be a lot more collaboration and focus on where these frauds are originating. And there are some fascinating activities that are taking place around being able to look at the threat vectors associated with social media, online marketplaces, and also phones, and the challenges around how these fraudsters are reaching their victims. But the second key point is around the development of those collaborative models and how they can be deployed in terms of learning behavioral characteristics around payments. What I think is really interesting about the US is, and where I think you get some of those kind of challenges, is that there are frankly more ways to send money in the US than there is in the UK. And so that makes it more challenging, because if I'm looking at behavioral characteristics, I kind of want to be able to look at behavioral characteristics as someone fighting financial crime, almost agnostic of the way someone sends money. Because if I'm looking at social engineering, if I've convinced you, Hal, that I am a genuine person and I'm looking for you to pay me money, if I struggle to get it through one way, I'm going to try another, and I'm going to continue until all of those have been used up. So reasonably, while I want to make instant payments as safe as possible, you fundamentally want to make the network as safe as possible. So that means using the characteristics of the things we've learned in the UK and thinking about the fact that we are looking at the fact that let me throw some information out there around what we've seen in the UK, because we've seen that this collaborative model being able to be deployed across just utilizing the payment message itself can be effective at identifying 80% of all fraud within a system. In terms of losses, at a really manageable false positive rate, which is how many payments I interfere with in terms of being able to find the ones that are genuinely fraud. And that's a really fantastic result. It means that you can effectively make it very inefficient for a fraudster to be able to execute fraud using instant payments, because they're basically in a position where they know 80% of that's going to get stopped. So they are having to expend a lot of energy and effort in terms of that manipulation for very little return. And it's a system which we're expecting to only get better. So if we think about how that applies to the US, as I say, something that can develop that consortium intelligence, learn from that pattern behavior, but applicable across a variety of rails, is something that I think will become a key aspect of being able to fight the fraud challenges around instant payments and beyond.
I think maybe the takeaway here is there is, no pun intended, safety in numbers, right? So more collaboration, certainly a more robust set of defense mechanisms out there as instant payment gain ground here in the state. Thank you very much for the look ahead as to what we might expect, and look forward to doing it again. And in the meantime, obviously, this will be an evolving story. Thanks very much.
Thank you very much, Hal.
Take care.